Hi, welcome back to the channel. My name is Dave, and today I want to talk about Disney. That's right, ticker symbol DIS, that one. Now, I was just down there for 3 days with my son. It was the spring break, and we decided to fly down there to check on a house that we're building. So we really love it down there. I know it's not for everyone. That's okay. But what I want to convey to you is that it was packed. There are people everywhere down there. And, we always have a good time down there. I love that I can jump on a plane, be down there in 2 hours, palm trees, they're swaying them. I'm jumping in the pool. So nice. So I started thinking back. I own Disney stock. I bought it about $100 a share, and then at 120 back in 2020. And then it went all the way up, 140, 150, 160, 170. I'm like, this is ridiculous. It's overvalued. So I sold it at 170. And it kept going up to 200. But now it says since kind of dropped off those highs back to 170, 160. Now it's all the way down to 137 a share. I'm thinking maybe it's time to start selling some puts, looking at picking up some Disney shares. Now, the odd thing about Disney is that they were making a ton of money, doing really well. Then the pandemic hit, and they also came out with Disney Plus. People got really excited, and they drove that price up during the pandemic. With the parks closed, doesn't make any sense. Now the parks are reopening, and they're making those billions of dollars again in revenue off those parks. So it does make a lot of sense. I want to look into it a little bit and see if it makes sense to sell some puts at least on Disney stock. So if that is what you're looking for, please stick around. Whoop. Ah, yes, Disney. It's so much more than the parks these days, right? We've got ESPN, we got Hulu, we got Disney Plus. We got a lot going on, lots of IP. And people love it, people hate it. But you throw it into the middle of Florida, too, where we got Governor DeSantis, then you got Disney, you got all kinds of craziness going on. And I think people still like to focus and think about the parks. So we had a visionary in charge of Disney, right? And his name was Bob Iger. And he did a lot for that company for a long period of time. Then he turned over the reins to a guy named Bob Chapek recently. And he's still kind of stumbling through it, trying to figure things out. And he doesn't have a lot of big fans at this point. So he's still trying to figure out his way. He's kind of known as a penny pincher, a cost-cutting guy. And that's not playing really well with everyone. So with Bob Chapek in charge, my biggest concern about Disney right now isn't the price, isn't the multiple, things like that. It's actually Bob Chapek and, squeezing people out. Because I think that Disney has this brand that can carry itself forward for years and years and years, as long as they keep everybody invested still. And if they increase prices too much and they start squeezing out the common man too much, I think that could be detrimental to Disney. Because those are the people that plan their whole year around going for a week. And if they can't afford to do that and they're going to go do something else, then they're not going to raise their kids on it like I did and have them going to Disney parks. At the same time, it is a big corporation, and they do have pricing power a little bit because there's such a demand for their product. So you are always going to have increases, but that's a good thing for somebody that's looking to invest in Disney stock. So there is a balance there, but I just hope that they're aware enough of this potential problem. And I know they do. They have people that analyze this kind of stuff all the time. But a little sidebar here that with Bob Chapek, that's going to probably be the most important thing that happens over the next few years. So let's start off by taking a look at a chart. And this is a 2-year chart of Disney, so we can go back to the tail end here, and we just cut off the pandemic. And we're starting the recovery process. We're working our way up, coming out with Disney Plus, and we hit a $200 top there. And then we start to bleed off, all the way back down to $137 a share where we sit today. A little bit of a support, or at around 130 it looks like. So that's the tail of the tape. That's where we're sitting right now. And I'd probably feel better selling puts if it was around 130 and I could sell the 120 put. But we'll take a look at those numbers. But when I think of Disney, I always think it's trading at a bit of a premium because people love this brand. This brand is adored all around the world. Some people don't. Some people really hate it. But in general, there's so much support for it. People bought this, and it didn't matter that it went to 200. They're going to keep in that account. So I'm not that way. I'm happy to trade stocks, but I feel like we're at a point now where if the fundamentals make a little bit of sense, understanding that it does trade at a little bit of a premium, this might be a good opportunity for me, at least, to jump in there and start selling puts. Let's take a quick look at the financial statements. They did cut their dividend. I don't know if it's coming back. I imagine that they want to, and they will in the future, but I can't tell you when or if. PE ratios through the roof right now. We'll talk more about that. Cash-wise, though, they're doing just fine. They do have a little bit of debt, but not out of the ordinary, and they've managed it really well through not having the parks open again. Now, common shares outstanding, you can see that that's grown quite a bit since 2017. 1.5 and then up to 1.8 billion shares, common shares outstanding. So that has grown, and that's not a good thing to see. But income-wise, they you can see their net income going back to 2017, almost 9 billion, up to 12 billion in 2018, 11 billion in 2019. Then a loss in 2020 of about 2.8 billion. They bounced back in 2021 to make a little bit, 2 billion. But I see them getting back to this 10 to 12 billion dollar number fairly quickly now that everything's kind of back online. So that really hit their earnings per share quite a bit. But overall, they've got good, strong fundamentals. Like, it's not going anywhere. They're going to be here for the long term. But it is a little rich right now when you start looking at some of these numbers. And if we check out macro trends, we can kind of see historical PE ratio and how this has changed over the course of the pandemic. So stock price at the top, net earnings per share here in the middle. And you can kind of just see the nice growth they had over a period of time until the huge collapse due to the pandemic primarily. And now they're clawing their way back to, I bet they're going to be able to get back to here within the next year or two. So if you look down at the bottom here, historically, they've traded in that, high teens, 20, 21, 22 PE ratio type thing. And if you look at it right now and you're like, well, 81, there's no way, it's too expensive. Well, you're kind of missing the picture here, because if they do get back to this $8 or $9 per share, then this is going to be about a 15 or 16 multiple. So I just think we're a little bit away, a year or two away from having this all kind of back in order. And the potential upside for it is huge. And we can also see these earnings coming back to where they were pre-pandemic. If you start looking at the quarterly report for 2022, so this is first quarter, you can see the revenues year over year right here, 34% increase. And if you go down to page 8, one of the ones that I like to see here is this parks and experiences, where last year, about 1.5 billion, and this year Q1 4.8 billion. So we're well on our way back to them generating all that revenue from the parks and being open. And I can see Q2 with summer coming and everything else being fabulous as well. So here I am gathering my information together, and I'm looking to sell a put on Disney. I want to put this money in my pocket, maybe not even touch Disney. But if it does fall down below 125 bucks, then I'm probably happy to own it, and I would probably trade the wheel. Now, having said that, I've already picked up some shares in my retirement account that I plan on holding until maybe we go back to the $170 level, and then I would dump it again. But right now, for this particular position, I want to sell it to open one put out about 1 month and collect 1%. So the $125 strike gives me 120 bucks. So we'll put that in our calculator, and we'll see if it hits our criteria and if it's time to pull the trigger, or if I should wait a few more days to see if Walt Disney corrects a little bit more and gets down closer to that 130 price. So if I punch this into my calculator, I've got, today's date, one contract Disney, expiring 5/6 at that $137 current price. I'm selling a put at 125. So it's got to drop 8.7% in order for it to get put to me. Premium I'm collecting right now is $120. That's my sushi dinner. So my collateral I need is 12,500 bucks. It's 100 shares of Disney at that 125 strike. I'm going to hold this for about a month. And for that, I'm going to get about an 11% annualized return. So pretty much this times 12 or close to it. So I feel pretty good about that. But again, I would rather do the 120 strike. I think I'd feel much better about it. So I'll be looking at that later this week, hopefully. But so annualized returns right around 11%. So a little bit under my goal of 12% or more. But it might be time to trade one now and feel like I can get maybe 2 or 3 contracts going with Disney and average into maybe that price at 120, right? So the thought process is, if it does drop to 125 and it ends up getting put to me, or it gets close to that price, then I can go out and sell another put further out at a lower price, maybe 115, and get that price that I'm really targeting, that 120. In the meantime, if it does take off, I get the premium. So I'm playing kind of both sides of it. So my break even is going to be 123.80, and that's probably the only other number down here that really matters. So if it was to fall to 123.80, that's my break even right now. So I have to decide, is this a good trade for me? So that's kind of the quick analysis of Disney as it sits right now. I'll let you know down in the comments whether I pull the trigger or not, but it looks a little enticing, and I do like Disney stock at 120. So that's just a really quick analysis of Disney. This is a stock that I really like because we're fans of Disney, just like the other people that help prop this thing up. But I was happy to sell at 170, and now I'm going to be happy to get back into it right around that price of 120. I think that's my goal. So if you have any questions on any of this, because this is just a surface level analysis, you should go do your own homework, kind of dig around a little bit. But if you have any questions on this at all, please ask down below. I really appreciate you watching, and we'll see you next time. Have a good night. Whoop.